Hi, welcome to Main Money Conversation presented by DigiBank by DBS. In this panel, we will introduce you to the panelists one by one. So, this panel will talk about rethinking of credit in the light of the pandemic. I will just throw open the conversation, this panel, starting with first question, which is also part of the title that we have. So, just wanted to ask you the first question with you know, it's been said that this pandemic for credit will be similar to what demonetization was for payments. I just wanted to know your views in terms of whether do you agree with that statement and how do you see the pandemic changing the lending?
What the pandemic has done is given a very strong push for digital access to credit. So it is very specifically that when we talk to consumers today at BankBazaar, we find that they do not want to go to a branch. They frankly actually don't want anyone coming home to collect any documents. They're saying that, can we do everything electronically? Can we do this without having to meet anyone? And I think fortunately for us, the RBI started allowing video KYC in January 2020, literally 60 days before the pandemic hit. So the big shift, I think, is movement towards digital or contactless delivery of credit cards and loans. I can give an example. So what was happening pre-COVID, right, is we had to pick up the other esteemed panelists were saying these KYC documents. So someone would come to your house, they would pick up these documents, they would have them dropped off somewhere, they would be verified, so on and so forth. Now with video KYC, right, a process which would have taken days now happens in a few minutes. We're able to sanction and disperse or issue that credit card or that personal loan in a matter of few minutes. And in the past, literally we had to come to your house and take a bunch of papers. So I think that's been a spectacular example of how a policy change combined with great technology has really provided, I would say, almost the only opportunity for us to have done business during the depth of the lockdown. Some of these changes are becoming permanent. So, like you rightly pointed out, it is easier today to get around. But a lot of times, right, just from a safety reason, consumers want that contactless. So, we're seeing even today, right, 80% of our business is contactless. And if you ask me 1 year from now, I see that persisting. So, I don't think this is adoption and it's going to fall away. I'm sure we'll hear the same thing from Adhir also. We expect this to continue to persist.
We have had mixed reports. So, on one hand, we've had bankers telling us that uh, things will pick up around the festival, and at the same time, we have these global rating agencies uh, talking about Indian banking system will be the last one to recover from the pandemic. So, in our mind, it's too extreme, and maybe because we do see reports which talks about, let's say, two-wheeler sales will pick up, or HDFC is witnessing transactions or inquiries which were pre-COVID level for housing loans. Uh, Without, I mean, being specific to anything, just wanted to understand that if we are talking about these two extremes, what sense do we make of it? If any one of you could take that question.
Dinesh, I want to give you a perspective with
Thank you.
my digital
Sure.
hat on at Bank Bazaar. So what we've seen is even though people might be spending less, very clearly they're spending more to shop online because today I don't have the option of doing it elsewhere. I'm just doing it online. So credit card spends primarily driven by digital buying are already touching pre-COVID level. So what we're seeing from the digital perspective, right, is there's been a bounce back that we're already looking at pre-COVID levels, even as we speak at this point in time. But that's not so much because the market has expanded, like the other panelists have said, but more and more consumers have moved or migrated, right, to accessing or using their financial products or accessing that credit digitally.
If I just, I mean, in parts, some of you did answer the question, but if I just ask you to structurally talk about what are the expectations then you have from the upcoming festival season, What are the kind of pickup that you have seen? Maybe if there are some segments that you have seen having more demand than the other, can you just talk about a bit on your expectations and things that you're looking at for this upcoming festival season?
So one is, I think we're seeing demand for credit cards increase during the festive season because there are a lot of special offers, cashbacks going on. So people want to, because when they're shopping on the e-commerce side, they see this big offer flashing. They all want to have that credit card with them. So the demand is there. I think on personal loan, I agree with what has been said. I think that, like Jasmeet said, it's taking time, but not because there is a lack of need for loans. I think people want it, but I think it's hard to open up the supply. I think the demand we're clearly starting to see come back where people need that personal loan for some reason or the other in order to manage their personal needs. On my side, Renu, both you and Tinesh have written extensively and deeply on this subject. Here's what we're telling consumers at BankBazaar. Firstly, you have to apply. So this is not going to come automatically. There are strict conditions where you have to prove you have been impacted, and all those are laid out. Secondly, right, there is a cost to restructuring. This is not a free lunch. Interest is being calculated. It is a last resort. If you can somehow pay, right, even if it means liquidating certain assets, do that. Use this as a last resort.